Thanks for clicking. Canadian real estate prices are set to drop by 17.5% from peak to trough. This according to a new poll of experts conducted by Reuters. Though there are some major problems and glaring omissions coming out of this poll, which we'll get to, it falls well in line with some of the more recent, more optimistic predictions that we've been seeing about the future of Canada's housing market, with RBC saying we might be in the latter stages of the downturn, and the Canadian Real Estate Association saying the slowdown in the housing market might be winding up. Yet, neither the poll from Reuters, the report from RBC, the report from the CREA pay any attention to the impending recession, of which, according to a new Manulife poll, 87% of Canadians think we're about to enter. Yet we know intuitively, and in a few minutes demonstrably, that recessions are closely associated with a fall in house prices. So at minimum, those who are predicting the extent to which Canada's housing prices will correct should at least be acknowledging the impact of a potential recession.
One mouth, 2 ears, listen to each other.
So what I want to do today is go over this poll that says Canada will see a 17.5% drop in our prices from peak to trough. Take a look at what the data says usually happens to our house prices during a recession, and then discuss what to look for next. Speaking of next, the end of the month is in a few days, and the local board should start releasing November's real estate data, and we'll obviously have an update out on that data on this channel. Click like and subscribe to get those updates, but for now, let's get into this poll. First off, the poll by Reuters, which says Canada's real estate market will see a 17.5% drop from peak to trough, which is a major deviation from the other reports that we've been seeing predicting a 25 to 30% drop from peak to trough. The poll was conducted initially by Reuters and then widely reported on by the Financial Post and then spread across to various other news outlets. Now, if we go and look at the actual poll, we can see that 12 experts were surveyed by Reuters, and a median level of those experts said that house prices would drop by 18%. But this widely reported poll has some real problems and some real glaring omissions. According to the data published by Reuters, these experts were asked how far the average price of a home would drop from peak to trough, of which a median amount responded with 18%. However, Canada's average house price has already dropped from $816,000 to $645,000, which is a 21% drop from peak to now. But regardless, let's assume that these experts thought Reuters was discussing the benchmark price, which is in fact down about 10% already. And as such, these experts were predicting another 7 to 8% drop in our real estate prices by the time we hit bottom. But, as we've said, this is a major divergence from the 25 to 30 to 35% predictions that we've been seeing over the past few months. So it begs the question, who are these experts? If we delve a little deeper into the poll, we can see that these experts are just 12 property analysts. But Reuters doesn't give us any idea as to what positions these experts occupy. Are they mortgage brokers, central bankers, realtors, Uncle Eddie? Reuters doesn't say. And I think this is a real problem with this relatively optimistic poll, which was widely publicized. The readers might be well served to knowing if there was any bias involved when these 12 property analysts made their predictions.
I would never.
So this poll from Reuters, which very optimistically predicts a 17.5% price drop from peak to trough, is riddled with errors and contains some very glaring omissions and was widely reported. And widely reported, glaring omissions are becoming all too common. As mentioned, the recently published reports by the RBC and the CREA give no mention of the elephant in the room, the impending recession. In fact, neither of these three reports, the one by Reuters, the one by RBC, or the one by the Canadian Real Estate Association, make any mention of the word recession, yet all predict an end to this real estate correction. All predict that the bottom could be coming soon. But we know intuitively that recessions are a contributing factor to a fall in house prices. It's fairly straightforward. People without jobs can't buy homes.
Sure you can.
And people who have lost their jobs often have to sell their homes. So you have falling demand and an increase in supply. Prices drop. And the data supports this. If we look at the past 40 years, we can see a strong correlation between recessions and the drop in house prices. Over the past 40 years, we've had 3 major recessions, and we can see in each one of them that there was a major deceleration of price growth, a major dip in our residential property prices. Now, it's impossible to infer causation. We can't say it was just the recessions that caused that major drop in house prices, as higher interest rates also preceded those drop in house prices as well. But nonetheless, we can see a strong correlation between recession and a drop in house prices, which makes sense. Like we said, unemployed people don't buy houses. And make no mistake, this is a recession that is very much being purposefully induced by the Bank of Canada, with Governor Tiff Macklem just recently saying that our low unemployment rate is unsustainable. Unfortunately, in order to get inflation under control, the bank wants to cause the unemployment rate to go up, which will put more downward pressure on wages, which will help ease pressures on our inflation rate. This is a recession that the Bank of Canada is telling us almost explicitly they are going to induce. And this is what really ties the overly optimistic survey by Reuters, the report by RBC, and the report by the CREA, glaring omissions. Politicians and central bankers try to avoid recessions like the plague, and for good reason. They cause a lot of pain and are very unpopular. In fact, as we've seen, politicians and central bankers are more likely to downplay the likelihood that pain is coming. And yet, this time around, they're telling us almost explicitly that more pain is on the way. This isn't like a year ago when they were still clinging to transitory and there was some thought out there that a major increase in the money supply wouldn't cause inflation and interest rates wouldn't go up. This time, they're being very upfront that this recession is coming, and yet we're still seeing these reports which pay no mention to the pain that they are telling us is coming. If recessions are closely associated with a drop in house prices, and that recession hasn't hit and won't hit for a few months from now, then how could we be near bottom? With all that said, we will continue to track Canada's real estate market as well as the Bank of Canada on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.